Daniel Carpio, how do you see the residential housing market for this year? Well, I talked a little bit at the beginning here. I gave you a forecast of what I thought the interest rates and things are going to look like. I do not think prices are going to start dropping in additional markets until fourth quarter, maybe. I think down here, Florida, you have so many people moving to Florida, it's artificial. But you already are seeing prices coming down. San Jose, San Diego, Phoenix, Tucson. I know it for a fact. I've seen it. They're down double digits year over year. The pricing is down. So it all depends on where you're living. If you're living in a low tax, good climate state, Texas, Florida, raise your hand. And then with kind of, you know, got some winners there, but not terrible winners in Nashville, you know, so Tennessee is there. You probably have housing markets that are not really moving, but you have a whole lot of other places where housing markets are moving. And I would say there's a phrase going, never try to catch a falling knife, right? You get cut and you don't catch the knife. So if you're in a market, you're seeing it drop, you may want to hold back. You know, hold back, because if you buy now and then it drops, what you've just lost was your down payment, because you still owe the loan. And if you have a crisis in life and you have to sell that house and move someplace in a year, you could have just lost your down payment. Like you buy, prices are $650, they get down to $525. You buy a house, you put $125 down and do a $400 mortgage, which is about 80-20. Woohoo! But then the prices go down to $560. Then they, excuse me, $525. Then they go down to $460. Keep dropping. And you have to sell your house, and you're only going to yield about $430 on that. You just lost your entire down payment. If you can't stay and you can't rent it and you're forced to sell, those are traps you don't want to fall into. But right now, depending on where you're in, keep an eye on it this summer. As soon as the Fed drops interest rates, I think you're going to see mortgage rates drop down into the 5.5, 5.75 range, which historically a 5.5 mortgage is not a bad thing. And that may be an opportunity. That's what I see for residential housing. If I had friends and family members thinking about it, I'd say watch your market, number one. Watch the housing interest rates, number two. But above all else, keep your eye on the Fed. As soon as you see the Fed dropping rates, like maybe if there's a little bit of recessionary news, they drop it in right before November or at the end of the year, I think that's what it's going to take to bring mortgage rates down a little bit.